Please visit tradingsim.com to simulate this trading lesson. Hey everybody, this is Al Hill from tradingsim.com. Today's lesson, we're going to cover a very basic trading strategy, especially for day traders. This is something called the moving average crossover. Basically what you look for is a shorter time frame moving average. So in this example we have the 10 period SMA to cross above or below the long period, and in this example we have the 30 SMA. So as you can see, there are a lot of crosses in here. One here, another here, up, down, right? So, they kind of produce these zigzag moves. So again, this is the trading simulator from Trading Sim, so we of course can see how the action will unfold. So you're going to see the perfect example here of how riding the moving average crossover can work in your favor. Alright, so in this example, this is JetBlue from June 21st, 2010. You can see there was a gap in the morning, and this gap, stock was not able to sustain those levels, so it quickly gave it up, came down and found support at the 10 period moving average, had a little minor retracement, and then now it actually broke below the low set from the initial reversal off the morning gap. So let's fast forward this here a little bit. Alright, the key thing you want to look at, right, you kind of see how this moving average is tightening up here, kind of has some negative action here, breaking through both averages, and then you shortly will see the fast period, or in this example, the 10 SMA crossing beneath the 30 SMA, which is our longer term indicator. So you can see here you have a clear cross. Now, generally speaking, right, you want to take on your position in terms of going with the cross right around here, where it's kind of testing it. Short 15,000 shares at market. So average price 653 once you factor in commissions. Alright, so let's fast forward this a bit. So you can see like the stock immediately starts to kind of give it up here. You're closing below the short SMA now, in addition to the moving average cross down. As you can see, the stock just kind of gives it up. Now the one thing you want to look for with these moving average crosses, you want to make sure that the stock moves quickly in your favor, right? So you can kind of see here, you got a cross down, but then it kind of went flat and kind of went choppy. Here you had a cross up, kind of goofed around, went flat. But notice here how you have this cross down, and within 3 or 4 candles, you really start to kind of kick off an impulsive move to the downside. So you definitely want to look for some action. Let's fast forward this a little bit. Another thing that can work in your favor is sometimes, not all the time, but sometimes when a stock starts to fall during the midday action, it can just kind of drift. I call them drifters. They just kind of start to fall on their own weight and just kind of really get going here. So, as you can see here, again, you have the cross down, strong move down off of that cross, and no real action, right? No real violent candles to counter this move down. And the tricky part in this and all of this is that you need some sort of confirming indicator, right? Be it the volume, maybe in a rune or an average true range. That way you can actually say to yourself that the stock is actually trending. Where the moving average crossovers, where you can get into some trouble, is if the stock is in a trading range or sideways action, because these cross signals of the moving averages are going to be false, and they're going to lead you to prematurely take positions that will whipsaw you back and forth and just end up having you take small losses, also with some considerable losses in terms of commissions. So you see in this example, this is the beauty of a moving average crossover. If you get it on the right side of it, you initiate the position, and then you sit back and you wait for the cross to go in the opposite direction. So it's definitely a trading strategy that does not require a lot of effort. It does not require a lot of trades per se. Again, because the stock is trending strongly, you will be able to capture that move and just ride it in either direction, whichever direction it's going in. So this example you can see here, we quickly made $4,200 in the simulation, approximately 4.29%, by just taking on a short position at 11:30 in the morning and holding it basically until the close. All right, so check out tradingsim.com to simulate this lesson. Good luck trading.